Hello, everyone, and welcome back to Sudden Wealth. I do hope you're having a wonderful week. If you do enjoy the content, please consider dropping that like and subscribe. So, thank you very much. So, today I'll keep it to one video, a bit of a longer video, but still one. I am considering to make a live stream tomorrow. I will try to schedule it. So, in case you have any questions, any topics that you'd like me to address, just let me know. Even if you cannot attend the live stream, but that you would like me to talk about during it, and then you have the chance to listen to it. Let me know in the comment section, or just come in to the live stream tomorrow. So thank you again. Now, today, Fed meeting, no increase in rates. So in case you haven't noticed, they do pretty much what the market is expecting them to do. So once the market prices either a hike or a pause, they do exactly just that, because they don't want to cause anything that may derail the markets too much. And usually the days of the decisions tend to be quite volatile. And even if you see a little spike up when the announcement is made, a little bit later, we tend to have a bit of a sell-off. But I don't think we're going to have any major or dramatic sell-off. The point being, we just removed another source of uncertainty from the market, so which ends up being positive. So one of the reasons why, maybe not in the exact day of the decision, but if nothing very dramatic happens, typically the upcoming days tend to be a bit positive, is because exactly you just removed a level of uncertainty in the market. Now, this Federal Reserve behaves extremely predictably. They do whatever is already priced in before the meeting comes out, and I don't expect them to have major to go much further away from whatever the probabilities say that they're going to do. So if they see something like at least 75% chance of a 25 basis points, which is 0.25% hike, that's exactly what you're going to see. If I think almost 100%, or what was it, was expecting a rate pause, that's exactly what you're going to get. And many people are already saying, oh, this rate pause is a clear sign that the markets are about to roll over, that everything is about to collapse. And there you go. That's why they are not increasing rates. Actually, it's not so much that. I think they are surprised that they've come so far so quickly without breaking anything major breaking. And the fact that if you look at the stock market, we are almost at all-time highs in 3 of the 4 main indices, or at least the subsection of the Nasdaq that I tend to look more, which is the Nasdaq 100, which is the one that I always refer to. We are almost at new all-time highs. We had a few regional banks going bankrupt, but I mean, none of the Great Depression 2.0 kind of expectations that were flowing around. So I do think that they are convinced that for a great part, they've done what they had to do. Now, with the oil prices rising, that's the big narrative. Maybe inflation will kick up again. Who knows? Probably. I mean, it makes sense that it would be kicking a bit higher. But I do think the longer we've been seeing these inflation readings, even positive or negative, they seem to have a lower and lower impact, which is normal when basically the same typical conversation is going around. So what ends up happening is that the news unless it's a dramatic news, like, I don't know, they were expecting 0.1% and you have 1%, maybe like a complete beat on inflation. Unless you have something to that nature, the impact of these readings will be lower and lower. Now, crypto is stable for the most part. Pulse chain, Pulse X, big green days. Maybe we have seen the bottom in that ecosystem. I think still premature to say. I think we need a bit more clarity that the bull market is starting and we don't gonna have a double bottom. That is very important because I always say, if you look at the previous cycles, you always have a double bottom. You don't always have it. About 50% of the times, you have a double bottom. So the last cycle was very clear. We went to about 3,250, and then in March 2020 we went to about 3,800. You put in the double bottom, and that is basically everyone thinks crypto is dead forever, blah blah blah, and then that's the bottom, so we can go up again. Now, the longer the time passes and we don't do this, the less likely it is that this time around we're going to see a double bottom. But it's still a possibility. If you have a big event bankruptcy of Binance or something to that nature, then you can put in a double bottom. Otherwise, the closer we approach to the halving, the less likely it is to happen. So in that sense, Pulse Chain, Pulse X, Hedron, Icosa, all the derivatives are all starting to perform real well, or at least seem to be trying to put clear bottoms. I did accumulate quite a bit in the depression phase, so I will be updating, maybe not in this video, but my next video on this, I'll be updating my cost average, as I've done for my previous ones. As I mentioned, I do like the activity behind the scenes on Cardano. I think that's a positive. BNB has been, working fine so far. I think it will be extremely bullish if, after all that has been thrown against Binance, they survive. I do think that puts them clearly, in my mind, in the number one position when it comes to centralized exchanges. I do think all the wins in the lawsuits against the SEC are all positive. I do think people should put aside their tribalisms and believe that when we are talking about SEC targeted projects, we should all be in the same side, right? Because they are all on the other side, so we better be united on that one. And I do think that as more companies are starting to issue these digital bonds using blockchain, there was a company in Europe, I think they've used either the Ethereum chain or Polygon chain, I'm not sure, but it has happened recently, which means that the more adoption you see from these sectors, the more clear it becomes to people with the real money that this is actually an industry to stay. Now you can cry about it, you can say, oh my God, but I don't want it, I want it to be for the people, for the little guys, blah, 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 all of that. I get it, I get the foundation behind it. But at the end of the day, we are all here so our bags can pump. And to be honest, they pump much harder with Bill Gates than with 10,000 people like me. So it's just a reality. And look, what I'm trying to do is I'm trying to see all the options for me and my family, how to get to the financial freedom that we so much desire. And I'm trying to make the movements that I believe increase the chances of that happening, okay? So I'm not here, I don't have personal, emotional attachment to projects or to companies or to whatever. I just look at things I try to be very objective, and I make my decisions on that side. So to conclude, what does this rate stop means? Does it mean everything's about to collapse? No, it doesn't mean everything's about to collapse. I've mentioned this many times before. The more bullish case you could have is they raise rates, they hold them, inflation goes down naturally, although it can go up 1 or 2 months, right? It will never go down every single month, every single time. That just doesn't happen. So that would be the most bullish case, because then in the future, if something negative happens, they have room to lower the rates again. But if they start already lowering rates and nothing major has happened, yeah, then that tells you that your economy cannot even run on even without any big crisis, without stimulus, which basically tells you that your currency is going to devalue, your debt is going to increase, and your money is going to worth less, and your standard of living will keep decreasing. What do I mean by that? Now, if we compare the US from the 60s with the US of now, it becomes very obvious. What is better? Technology. We all agree. But in the 60s, one person was working, typically the husband, high school diploma, 4 children, 1 house, 2 cars, vacations every year. Good enough. Nowadays, 2 parents, master's degrees, one apartment, maybe 2 kids, maybe 2 cars, one of them owned, the other one maybe leased by the company, whatever. And there's not even the option of one of the parents to stay at home. They actually both, there's no option here. They both have to go to work. So that is the decrease of the standard of living that is caused by our money losing value. So when people say, oh, I don't see the problem with printing money, well, there it is. And by artificially lowering interest rates, what's the problem? There you go. That is the problem. It takes, in the fiat world, which is the world we live in, it takes decades to notice. I mean, in weaker currencies, like Venezuela, Argentina, Zimbabwe, it becomes more apparent quicker, but in stronger currencies, like the euro or the dollar or the yen, it takes longer, but we all are going up into the same direction. So the ideal would be at least to have the money at 5.5% or so, costing that. And if we can live with that, I think we can live longer than people think with it, which is why all these guys were, predicting the end of the world and everything collapsing. I said, no, we can survive longer than you think, but because trade deficits and budget deficits keep accumulating, then your debt keeps accumulating, so your interest payments become increasingly more painful, which means your budget deficits increase, which means you need more debt, which means you see the point. And in all those scenarios, if you look at it right now, in the future, crypto seems to, in my opinion, is going to play a big role in it. And when people talk about bubbles, you have $400 trillion in the bond market, bubble. You have about 100 trillion in the bond market, bubble. You have about 120 trillion in real estate, bubble, all around the world. Then gold is about 10 trillion, 11 trillion. And then you have crypto, 1 trillion. It's, oh yeah, crypto is the big bubble. Crypto is the big bubble. So really? So you think that $1 trillion is the bubble, not the 400 trillion, not the 100 trillion, not the 120 trillion. The 1 trillion is the problem. Suit yourself. Of course it isn't. There's a reason why China is buying Bitcoin heavily. There's a reason why BlackRock, which is a quasi-government institution, already owns 5 of the 6 miners. That's why of the mining pools of Bitcoin. That's why they're launching the Bitcoin ETF. ARK ETF, already applied for an Ethereum spot ETF. These things are here to stay. Companies are using it to issue debt. Companies are considering to use it to tokenize their shares and basically bring the securities world into the crypto world, into the blockchain world. So this will happen. So even Peter Schiff is playing with ordinals. So my point is, this is here to stay. This will develop. Doesn't matter what people think. And the point is, a lot of people, the majority of people that I talk to, are still very much against it, still hate it, still talk about the bear market. All of these are good signs to me. That means that we are not early, or that we are not too late. We are still in an early stage going forward. So sorry for the bit of a longer video, guys, but just one tonight. So thank you very much, and I will catch you in the next one. See you tomorrow. I will schedule the live stream. Thank you, guys. See you.